Hey YouTube, this is the Robinhood investor. Hope you had a great day of trading. As always, I really appreciate the support, so if you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. Today I'm going to talk about Apple, ticker symbol AAPL. So Apple reported earnings after hours today. That's why you see after hours is spiked up. So earnings reports are important to follow because they provide insight on historical performance, typically on the previous quarter, and future guidance, which includes information a company provides as an indication or estimate of its future earnings. So today, after hours is spiked up over 5%. And in terms of performance, past week, up 6.02%. Past month, up 3.12%. Past 3 months, down 24.62%. Past year, down 3.93%. Past 5 years, up 108.04%. So as you can see, it started dipping early October. So let's talk about the earnings. But before I do so, let's look at some of the data behind the company. So in terms of the 52-week high and low, on the high end, it's $233 versus on the low end, $142. And you can see, compare that with the current price, $154. So this is more on the lower end within that range. And in terms of volume, this is a very high volume stock with high liquidity, so it's easy to get in and out of the stock. Market cap is $731.6 billion. Trailing PE is 13.17, which is below the market average. Revenue is $265.8 billion. Net income is $59.5 billion. And revenue growth is 15.9%. In terms of dividend, it pays $2.92, and the yield percentage-wise is 1.89%. A payout ratio is 25% is actually really good. So in terms of the earnings, Apple beat the estimates by 1 cent, and it also beat on revenue. So in terms of GAAP EPS, it was $4.18, which beat by 1 cent, and revenue of $84.3 billion. And that's down 4.5% year over year, but beat by $330 million. And also in terms of the breakdown of each of the categories. But before I go into that, it's like I mentioned, revenue is down 5% year over year, and the downsides in iPhone and China were largely priced into the quarter following Apple's outlook cut earlier this month. And in terms of revenue breakdown, iPhone made up $52 billion, and that was down 15% year over year. Mac generated $7.4 billion, up 9% year over year. Wearables, home, and accessories generated $7.3 billion, which is up 33% year over year. iPad, which was $6.7 billion, up 17% year over year. And services, which is the business they're trying to grow, is $10.9 billion this past quarter, up 19% year over year. So as you can see, the services business is growing really fast, and it's not something to laugh at relative to the other categories. And the good thing is that in terms of services, the margin for the first time they reported it, and it was 62.8%. So it's a very highly profitable, high margin category to be in. And Greater China revenue fell from nearly $18 billion in last year's quarter to 13.2 billion. So China definitely had an impact to Apple's business overall. And this is due to the iPhone weakness to the China's soft market. Operating cash flow was $26.7 billion, and Apple returned $13 billion to investors during the quarter. Net cash balance was $130 billion at period's end. So they currently have a cash balance of $130 billion. So they can easily acquire or make acquisitions with that, or easily reinvest it back into its growth. And in terms of Q2 guidance, it's revenue of $55 to $59 billion with a consensus of $58.97 billion. And then gross margin was from 37 to 38% with a consensus of 38%, and operating expense of $8.5 to $8.6 billion. So overall, this is very positive news for Apple, other than the fact that the iPhone sales in China definitely impacted the overall business. But other categories are doing well, and I think future guidance is not bad. Now let's go to tip ranks. So other analysts rate this, 17 analysts rate it with a buy, 19 are holding, and 0 are selling. So overall, this is a moderate buy. And in terms of average price targets, it's $183 per share. On the lower end, it's $140. On the higher end, it's $300. So with the target of 183 relative to where it's currently at with 154, there's some upside to it. So what are my thoughts on Apple stock and the overall business? I actually have a stake in Apple, and I'm going to continue to hold my positions. And I believe it's a really good long-term dividend play. And even though the outlook for iPhone sales is not as high, I think overall, as they're still growing, especially with where it's currently at in terms of the size. It's actually very impressive that they're still able to grow in each of the respective categories and continue to add value. So I think this is a good long-term hold, and I'm going to continue to average down on my positions. So that's where I'm at with Apple. That's all for this video. Which stocks are you looking at, and which earnings reports are you following? Comment down below. If you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. See you in the next video.